In response to the tweet from Tesla and Twitter CEO Elon Musk, Larry H. Summers stated that Fed data has too much latency, mild recession is already here. It's not like just the canary in the coal mine Sebi died, one of the staunchest miners. What do you think will happen to Tesla and its stock as predict tough economic times ahead? Everyone knows how volatile the stock market is and how Tesla suffered a lot in the past year because of this. With a lot of competition in the EV space, who knows how Tesla stock will perform amidst a tough economy? I think a slowdown is likely to come. The odds of that happening sometime in the next 12 months are pretty good, perhaps 70. In a recent CNBC interview, Elon Musk, the CEO of Tesla, and David Faber, the TV network's financial journalist and market news analyst, discussed how inflation and the recent rate hikes by the U.S. Federal Reserve will affect Tesla. Musk stated that he anticipates that the coming year will be tough and difficult for businesses and the global economy. Musk noted that Tesla is not exempt from the effects of rising interest rates, which he described as acting as a kind of brake pedal on the economy. He claimed that raising the rate increases the cost of many goods, including those purchased with credit, but it also has a knock-on effect on non-credit purchases. For example, if your monthly car or house payment takes up more of your income, you won't have as much money to spend on other purchases. In light of this, Musk voiced his concerns and warned that the Federal Reserve most likely wouldn't be lowering rates anytime soon. Musk went on to say that the information is essentially outdated. The Federal Reserve raised interest rates slowly, and I predict that they will drop them slowly as well. During the shareholder meeting, Musk discussed his bleak outlook for the economy in the coming year, stating that the car industry would be greatly impacted by the hiked interest rates. However, Musk cautioned against overreacting, pointing out that there are good times and dark times and that the good times follow the dark times. Scott compared this ideology with how Tesla sets and adjusts its prices based on demand, noting that the company uses real-time information about orders placed on any given day. He informed attendees on Tuesday, so my recommendation would be to purchase the drop if there is one and avoid looking at the markets for the next 12 months. Given this, I believe you won't regret it. Mogul stated that the upcoming year will be challenging, that no company is exempt, and that he anticipates a sharp increase in corporate bankruptcies. At Tesla's annual shareholder meeting in mid-May, Musk made this prediction. Musk was attempting to explain why Tesla had decided to cut car prices 6 times this year. He said that most people buy cars based on monthly payments. The question is simply whether they can afford it. Musk went on to say that this issue has become even more crucial because interest rates are high in a banking crisis, preventing many banks from lending money to those in need. Musk claimed that lenders are focused on avoiding failure in the shareholders meeting. Elon Musk also announced that the company will alter its business procedures, deciding to start advertising for the first time in its 20-year existence. This could be an attempt to get as much support as possible to help Tesla weather the harsh economic times he predicted. Musk revealed that the upcoming year will be difficult, so I want to be quite realistic about it. He stated that although most companies won't be able to weather the current global economic climate, Tesla will thrive. I expect it to be at a macroeconomic level difficult for at least the next 12 months. He said, adding that Tesla is not immune to it. I believe that many businesses will truly file for bankruptcy. Musk stated, I want to make sure that this is not just the good news parade. It's important to understand that no company is immune to the macroeconomic environment. He also noted that the current state of affairs won't last forever, predicting that everyone would likely experience difficulty for a year before the world economy turns around in about a year. Finally, Musk reassured Tesla investors. This is not the first time the billionaire has expressed concerns about the state of the economy. In April, Musk stated that if interest rates are raised further, the already mildly recessioned economy would enter a severe one. Meanwhile, in a mid-May Fast Money event, Deepwater Asset Management managing partner Gene Munster stated that the company stands above the rest when it comes to growth opportunities. Just a few days ago, Tesla's stock shot up to a 2023 high, noting that it has increased by more than 110% from its January low after the electric vehicle maker offset its historic 2022 losses. Everyone is aware that Tesla's stock fell sharply last year after rising during the pandemic, due to investors losing faith in the company's promises of almost infinite growth and Musk's controversial acquisition of Twitter, which he paid $44 billion for last year, diverting the billionaire's attention from Tesla and taking away his time and money. After Tesla announced record quarterly revenue and earnings in January, Wall Street started to have more faith in the firm. This led to a rally that grew stronger as Musk recruited a new CEO for Twitter and made friends with us lawmakers as well as those in China and the federal government's confirmation that Tesla vehicles qualify for a $7,500 tax credit, and the Mongolian government's indication that it is open to hosting a Tesla battery factory helped Tesla stock rise more than $3 to $229 in early trading a few days ago. As a result, Elon Musk's company is currently trading at its highest level since November 1st, 2022, since Tesla's shares fell to a 2-year low in early January. They have recovered one, making it the third largest return of any SET 500 company. As a result, Musk has surpassed LVMH chairman Bernard Arnold in terms of wealth for the first time in 6 months, with a valuation of $216 billion as of early June, up nearly 50 since late 2022. Many people believe that the reason for the spike in Tesla shares is that all Model 3 sedans are now eligible for the full EV tax credit. The federal government verified the announcement on its Fuel Economy Got website. At the federal government's requirements for the EV tax credit mandate that 40 of the critical minerals be extracted in the United States or a country with a free trade agreement, and 50 of the value of the battery components must be manufactured or assembled in North America. Tesla recently announced on its website that all versions of the Model 3 sedan now qualify for full federal EV tax credit of $7,500. Previously, the cheaper Model 3 rear-wheel drive version qualified for half the amount. No explanation was provided for the change. Tesla provided an update on where it was getting components or assembling packs for the Model 3 rear-wheel drive batteries. Before the announcement, it was reported that Tesla was using lithium iron phosphate, aliphat phosphate battery cells manufactured in China. However, with the full federal tax credit included, the Tesla Model 3 rear now cost $32,740, provided the buyer meets certain requirements such as income restrictions and SRP caps, 80-0 for trucks and SUVs, and 55-0 for vehicles. It turns out that some of those buyers, particularly in California, could get a Tesla on the cheap right now, or at least while incentives last subscribe for more foreign subscribers. Tesla investors and analysts are looking. Here's the Gen 3 vehicle platform to open up a whole new market of middle class and younger buyers for EVs.